What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and Coinbase sparking some controversy here. There's a picture that's been circulating all over financial social media, and it is this graph that shows the number of shares that a ton of insiders and executives dumped onto the market the opening day of trading. And so what we're going to look at today is, number one, what do these numbers actually represent? Do they represent a pump and dump, basically, where insiders are getting out of their stock as fast as possible? They want nothing to do with holding ownership in the company anymore? Does it represent just a tiny fraction, just, hey, insiders and people who have been a part of the company for a long time wanted to, have a little bit of reward for all the hard work they put in, and they still own a massive, percentage of the shares that they originally did? And whether this gives any indication or not into the future of Coinbase itself as a company, and maybe can provide a little bit more guidance on whether Coinbase is a good company to invest in as an individual investor or not. Ready? Let's dive in. So here's what we know. $4.6 billion worth of shares were sold by executives and insiders on opening day. Now, there's been some defense from this, and we're going to look at the numbers that it represents a fraction of total ownership from all these guys who are selling. But it's important to note here that this would not have been possible if the company did an IPO instead of a direct listing. If you don't know the difference, watch my video here. I've got it linked in the description below on IPOs versus direct listings. But IPOs specifically have limitations, have time frames, they're lockup periods where insiders, executives, they cannot sell their shares. And part of the reason is because with an IPO, you're selling your shares to institutions. The underwriter is buying a ton of shares. They're providing a floor and saying, we're not going to let the shares go beneath this price. And they're selling it to their buddies. They're selling those shares to their buddies. And the big boys don't like to get swindled. And so they say, yeah, we'll participate in IPOs. We'll buy these shares. But we want to know that the leadership of the company is not just trying to escape and not trying to dump their shares on the public right before the company collapses. And so we want to make sure that there's some short period of lockup period where the insiders can't be dumping their shares. No such rule exists for direct listings. If a company does a direct listing, there are no rules preventing them from selling some or all of their shares. Now, logistically, this makes sense because in an IPO, you actually create new shares that are sold to the public versus a direct listing. They're just selling the existing shares. But when you have a company that's in hot water because it allegedly looks like insiders are selling a ton of their shares and they chose to do a direct listing, it warrants a little bit further digging into the numbers. So let's take a look at some of the big individuals, because we know it was about $4.6 billion total that was sold by these guys. So let's see if that's significant. Let's start with the CEO, Brian Armstrong. Based on what the price of the shares were trading at on opening day and multiply that by the number of shares that he sold, Brian Armstrong was able to cash out and he got about $291 million from selling his shares on opening day. Now, that's a huge number, right? Anybody who is, has started a company, has led it, has grown it, and is able to take it public, they want to sell some. They want to take a little bit of a payday for themselves. 291 million, nice little chunk of change. But how much did that represent of his total shares? Because if that's 60 or 70%, red flag, sell, short, run away, right? If the CEO is dumping most of his shares on opening day, there is no bigger red flag than that. The problem is, it's actually not clear how many shares he has. There's multiple reports and unverified numbers right now, and maybe this won't be true by the time you watch this video, but right now it's unclear how many shares he actually still holds. According to his Form 4 disclosure, he retains about 300,000 shares, which at the current price is worth somewhere around $1 billion. Now, this is the most aggressive estimate. So this is like worst case scenario. CEO Brian Armstrong sold 20 to 25% of his shares. That's a massive percentage for a CEO of a company to sell, especially considering the dollar amount. That gives him a pretty nice parachute to fall back on if something goes down with the company. But he's retained at this point, given these numbers, 75% of his wealth in his company. That's still fine. It's not, a massive red flag. It's a little bit, but not massive. Now, all the way on the other end, if we look at a filing prior to the direct listing, it indicated that he holds about 36 million shares. And if that is true, it means he sold about 1.5% to 2% of his shares. Now, if that's true, absolutely no big deal. You sell $300 million worth and you retain $11 billion worth? No big deal. Chump change. But it's not just the CEO that we have to worry about here. We have to look at all the insiders because he sold about $300 million worth of the total $4.6 billion worth of shares that insiders sold just on opening day. In fact, one of these C-suite directors sold his entire stake in the company. And it wasn't small. Fred Wilson sold 4.7 million shares of Coinbase on opening day, totaling up to $1.8 billion. Another director, Mark Andreessen, sold over 1 million shares. CFO Alessia Haas sold about 15% of total holdings. The CPO sold about 8%. COO sold about 24%. And of all of the reports and all the data that has come out so far, all indications show that insiders only sold, whether some sold 1.5%, all the way up to some selling 100% of giant amounts, $1.8 billion worth. Not a single insider did any buying. Now, any one of these isolated by itself would not be the biggest deal in the world. But when you've got a company that chooses to do a direct listing to go public, which is the only option that gives insiders the ability to sell as much as they want whenever they want, no lockup period, and you have some of the biggest insiders and one of them completely exiting his position totally, that's slightly alarming. Now, I'm not a big fan of the company or their product in general, even without looking at their whole shenanigans right now going on with their direct listing. In fact, on this channel, I've actively said that I would never recommend people use Coinbase, as in my opinion, it's a pretty terrible product. They've got horrible customer service. Just do a few Google searches to find out how many people have gotten their cash and cryptocurrency stolen because they have it in Coinbase and they don't have it in a wallet. There's security concerns there. Their transaction fees are extremely expensive. And for years, they were trying to take down Bitcoin and were instrumental in getting some of the forks created because they were hoping that the market would shift to something that would profit them better at the expense of Bitcoin security. Add on to that the fact that there are more and more reports coming out lately that they are actually engaging in fraudulent activity, filling clients' trades outside of the bid or ask, taking the other side of those trades, and doing shady, if not outright fraudulent activity. So for me, I'm completely passing on Coinbase. And quite honestly, even if they didn't have all of the issues with their direct listing right now, I don't believe in the product. I don't like their product. Now, obviously, make your own decisions. This isn't trading advice. I know a lot of people disagree with me, especially investors that have a very good track record like Cathie Wood of ARK. She sees tremendous upside with Coinbase and noted on a recent interview with Bloomberg that they basically just buy the dips, especially on companies like this. So I'm not saying you can't make money with companies like this, and I'm not saying that just because a company does something wrong or fraudulent doesn't mean that they can't succeed and do really well and grow over the long term. But for me, it's not worth the risk, and I'm not touching it with a 10-foot pole. As always, I really appreciate you guys. If you enjoyed the video, please hit that like and subscribe button for the YouTube algorithms. Thanks so much for watching. Have a good day.